Hello and welcome back to Wealthwise, your home of financial freedom. I have done a couple of videos reviewing certain investment opportunities, collective investment schemes, that is the special funds. And I have been receiving certain comments that gave me the impression that probably we haven't understood the concept of special funds. Now, when someone asks you whether it has capital preservation, when someone asks for a recommendation for a money market fund because this person is too scared of investing and losing the money, and then someone replies and recommends Mansa X fund as an MMF opportunity, then that gives me the impression that the market, or we have not fully understood the concept of special funds or the risks of investing in special funds or the nitty-gritties of special funds. So the essence of doing this video is to highlight the possible risks in investing in special funds, so that even when I tell you that Avocap gave a return on investment of 58%, Mansa gave a return on investment of 20%, Oak returned I think 23 or 20%, and Kuza Momentum gave a return on investment of I think 48%, you have a full understanding before you get yourself into, before you fill that form and start investing in any of these special funds which offers or which promises higher returns, you already have a good understanding of what exactly you're getting yourself into. Okay? So in this video, I would like us to specifically focus on the risks or the disadvantages of investing in special funds, so that at a personal level, you are able to assess your risk threshold or your risk appetite and make an informed decision as to whether it's time for you now to diversify in these special funds. And I'm going to try to make it as simple as possible, so that at the end of this video, I would like you to tell me whether special funds is an alternative to money market funds. I'd like you to tell me at the end of the video whether special funds can be an alternative to investment in treasury bonds, now that bonds are giving us lower returns, yeah? I would like you to tell me at the end of this video whether special funds can offer you capital preservation. My name is Berlin. If you haven't subscribed to this channel, you are missing out on a lot of information. Please press the subscribe button as we continue. Now, special funds is a collective investment scheme. You see, just the same way money market fund is a collective investment scheme where we give the fund manager money and then they invest in low risk investments. Now, with money market funds, the Capital Market Authority have specified the duration of the investment of the assets that your MMF can invest in. The tenor, the duration, the investment duration that your MMF can invest in, I think should be 18 months. CMA has also specified, has given a limit on the percentage of that fund that can be invested in a specific asset. Okay? Now, the special fund doesn't have that 18 months limit. It does not specify these specific low risk assets. That is why it's called special funds. And all special funds will always have the word special added to them. Okay? So when you see an investment, a collective investment scheme that has the name special, I want you to know that that is not a money market fund. It is a special fund, just like its name suggests. So what is it about special funds? Special funds is a collective investment scheme. It's targeting high yield assets like real estates, commodities, precious stones, that the guys who now buy gold and whatever, commodities like wheat and oil, whatever. They also invest in stocks, shares, both internally and across the borders. Some specialize in investing in stocks within Africa, right? They invest in forex. They invest in government securities, both locally and across the borders. But the beauty of it is that these places, the assets where these special funds are investing in is always communicated to us in their fact sheet. So what am I saying? Before you open an account for a special fund, go through that special fund's fact sheet. See where this fund invests your money. If you feel comfortable in your money being invested in China, then it's okay. Go ahead and invest in a special fund that invests in China. If you don't feel comfortable your money being invested in China, you only want to remain in Africa, then go ahead and look for a special fund like Avocap that has specialized in investing in Africa. They actually have a fund for Africa, and they have another fund, I think, where they invest in China, yeah? But this information is available on their fact sheet, okay? If you want to try a hand in Forex, then go ahead and go for a special fund like Mansa, a special fund like Oak Fund that also invests in Forex or does Forex. Before you get involved in a special fund, you need to know where your money is going to be invested in. Remember, Capital Market Authority does not regulate the trades or the investment or the markets in South Africa. Capital Market Authority does not regulate the investments or the trades happening in the stock exchange in US or in China. So in as much as they are regulated here in Kenya, in as much as they are licensed here in Kenya, the foreign markets are not regulated by the Capital Market Authority. So that means that CMA will not 100% regulate your investment in the special funds, even though it is licensed. So that is why it's important for us to understand the whole idea behind special funds. Now, let me ask you, I have told you that these special funds, some of them, yeah, a portion of your money will be invested in shares in South Africa, or maybe a portion of it will be invested in stocks, in shares in US or in UK or in German, depending on whichever special fund you'll have picked. Do you think special funds offers capital guarantee? Capital is your initial investment. Mansa requires a minimum deposit of 250,000 shillings. So when you take your 250K to Mansa X, that is your capital. Oak Fund requires a minimum of 500,000 shillings. When you take your 500K and give Oak Fund to invest for you, that is your capital. Avocap requires about 110,000 shillings, so that is your capital. And I have told you that once you have given them this money, they are going to invest it in high niche products. Their aim is to offer us higher returns. That is why when money market funds are now paying us 5%, when MMFs are paying us 11%, when the bond, the tertiary bonds, is now at 14%, 13%, 12%, the special funds are still promising to pay highs of 25%, or they have a hedge of 20. They have a target of as high as 20%. Why? Because they are targeting to invest in high niche products. So now that I have told you where they invest, you have a better understanding of where they invest. Do you still think that special funds can offer us capital preservation? Let me know in the comment section. Do you think that special funds has capital preservations? Let me know in the comment section. I need to understand that we now have a good understanding of this. Please let me know in the comment section if you think that special funds can offer us capital preservation, that your initial investment in the special fund can never be lost. What do you think? Drop me a comment in the comment section. Now, what are the risks that these special funds are exposed to? What risks will your money or your investment in any of these special funds be exposed to? For you to know this risk and to understand what risk you're getting yourself into, it's important for you to understand the risk that the underlying assets will be exposed to, because that is the risk that will be transferred to you, the investor. Okay, so when a special fund is invested offshore, it means, can you invest out of Kenya in Kenya shillings? Of course not. So then that means that your money is going to be invested in a different currency than Kenya shillings. And so what does that mean? What risk does that predispose your money to? Forex risk. Because your money is going to have to be converted to a different currency. And for you to be paid back your money, it's going to be converted again back from that currency to Kenya shillings. So that predisposes us to forex risk, all right? It also predisposes us to market risk, because we will carry on the risk of those specific markets. The US stocks have been on a slump. So if your money was invested there, then you know by default that happenings in that market is going to affect our investment. Okay, remember, it's a collective investment scheme. It's going to affect our investment. We have volatility risk, market volatility. When foreign exchange is fluctuating, or just the the stock market is just hula balloon here and there. Now, another risk that I need you guys to know on special funds, because this investment is highly sophisticated, it needs higher skills. It needs constant monitoring of market. If you have ever engaged people who invest in forex, they will tell you that some of them are up at night monitoring the markets, because when we are sleeping, that's when the people in the West are working. That's their working hours. So what does that tell you? That someone needs for them to trade in the foreign markets, For them to trade in the foreign markets, someone needs to be up at midnight, at night rather, because that is when those markets are active, when we are sleeping here. So let me ask you, someone, as we are sleeping, or as I am sleeping, someone in these special funds, working in these special funds, is in the office or even working from home, monitoring the markets, making a decision as to when to make a buy or to make a sell. Do you still expect them to charge us just 2% like the money market funds is charging us 2% management fees? Of course not. They are putting on extra effort. It requires more sophisticated skill, so much such that even I, myself, at a personal level, might not have that level of skills, okay, to monitor those markets, commodity markets, and make the right investment decisions to give you a return on investment of 19% like Mansa X did. So what am I saying? They are certainly going to charge us higher. That person is going to be paid. Of course, it's going to be paid higher. So this payment, this expense is going to be has to be passed on to us. So special funds have a higher charge as opposed to money market funds. Now that we have a better understanding of special funds, I don't know, I hope you now have a better understanding of the risk in special funds. You can now tell whether you can transfer all your money from your money market fund to a special fund, or you'll want to continue keeping a portion of your investment in your MMF and a portion of it in the special fund. Now, who is ripe to put a foot in special funds? At what point is it recommended for you to now diversify your investment from these other assets into special funds. Who can invest in a special fund? Special funds are not ideal for beginning investors. If you're just beginning your journey in investment, special funds is not ideal. When you're beginning, your risk appetite is still low. When you see someone is asking an MMF that will protect their money because they fear losing money. If you fear losing money in a money market fund, when you hear special fund, run. Why? Because special funds have a higher risk than the money market funds because of the nature of the underlying assets of the special funds. The money market funds have a lower risk. The special funds carry a higher risk because of the different assets. So if you don't have the risk appetite for an MMF, if you still lose sleep when you invest or when you save your money in an MMF, then do not look at a special fund. You are not ripe for a special fund. Special funds are investment vehicles that are ideal for people who have a higher risk appetite. Special fund is an ideal investment for a seasoned investor, for an investor who is not starting today, for an investor who is desiring to have higher returns. And with higher returns carries a higher risk. For an investor who has understood the dynamics of special funds. This is an investor who has already started investing in shares or who will not lose sleep when you invest in shares or in NSC. Why? Because it carries a higher risk. Because you already understand the fact that you can invest, you can buy KCB shares today at 42 shillings and 6 months down the line or 1 year down the line, these KCB shares will still be 42 shillings. You'll not have made money. This is an investor who understands that you can buy KCB shares today at 42 shillings and a few months down the line, these KCB shares, when you want to be selling them, the shares might have dropped to 35 shillings. This is an investor who will understand that you can buy housing finance shares at 8 shillings. And a few months down the line, those shares will have dropped to 6 shillings or to 4 shillings. So you understand that that investment does not have capital preservation. It does not guarantee that you will always get back your initial investment. You understand that yes, you have a good potential, a very good potential of making higher returns, of getting higher returns of investment. However, with that high potential of making higher returns of investment, it also carries with it a higher risk because there's a possibility of you losing a portion of your money. But what has been, that is why it's important for you to, I know, yes, it is true for a fact, and I have said this a couple of times, and I'm also going to tell you, and in fact, if you look at these are special funds fact sheets, there is a disclaimer, one disclaimer that all of them give us. What is that disclaimer? That all the special funds give us. Let me know in the comment section, what disclaimer have you seen on Mansa, on Okfund, on Kuza, on Avocap, and other special funds that you have invested in, or that you have gained an interest, or that you have looked at their fact sheet, or that you've watched my videos? What disclaimer do they give us? They all say that past performance does not guarantee future performance. It can just give you an indication of where this fund could be. But because Avocap gave us a return on investment, an annualized return of investment of 58%, does not mean that in this year 2025, they will give us an annualized return on investment of 58%. It says that because Kuza Momentum gave an annualized return on investment of 48%, does not mean that that is the return of investment that they'll be giving us this year. They could actually give us 15% lower, or they could give us more. It says that because Mansa X has been periodically giving us a higher return on investment, does not mean that even in this year 2025, they will give us a very high return on investment. However, it is important for you to look at the past historical performance. Even though it does not guarantee future performance, it's important for us to look at the historical performance. I have seen a fund where the fund manager has been making losses in a couple, I'll not mention the fund, but I've seen a fund where a fund manager has made losses, annualized return losses in a couple of months, in a couple of years. Now, at a personal level, between this fund manager and this fund manager, Mansa X, tell me which one you'll feel more comfortable going for. Even though I know for a fact that past returns does not guarantee future returns. But when you see this track record, and when you see this track record of Mansa X, which one would you feel more comfortable putting or stepping the waters with? This one, which makes some losses, which has a history of making losses, or making negative returns rather, or this one, which has a history of positive returns? Let me know in the comment section, and don't mention any fund that I've told you I'm not mentioning. I'm not here to taint any brand. Don't mention any fund in the comment section. Just let me know which of these two, the one that has a history of sometimes making negative returns, or this one that has a history of making positive returns. Now, I'd like to know, do you now have a clearer understanding of special funds? Do you now think, do you think that special funds can offer you capital preservation? Do you think you can test the waters with investing in special funds, especially now that we are in a low interest rate regime? We all want to maximize our return on investment. We all want whatever little savings we have to grow. Do you think you are ready to try investing in any of these special funds? Do let me know in the comment section. And if you have already invested in any of these special funds, please share with us your experience. Which special fund have you invested in, or have you managed to diversify in more than one special fund? And what is your experience like with your investment journey in that specific special fund? Otherwise, thank you so much for tuning in once again. My name is Belin. I hope that we shall all be in a position where we'll have understood the dynamics of special funds, and we'll have increased our risk appetite level so that we can diversify our investment portfolio and don't lose out on these opportunities of earning higher returns. Of course, having understood the risks that our investments will be predisposed to. Thank you so much for staying around. This is your home of financial freedom. Let's meet on the next video.